Do you want to know what's going on with the Central Ohio real estate market here in October of 2025? Well, stick around, we're going to talk about that next. Hey friends, Ryan Reynolds here with Keller Williams Consultants Realty in your October 2025 real estate market update. So let's talk about real estate, and we're going to talk about it through the three lenses we normally speak about, which are inventory levels, interest rates, and of course, what is my house worth, how much are sales prices on average and in the median. So let's go ahead and kick things off with inventory levels. So as you can see from this graphic here, what we see are the inventory levels are elevated. They actually are higher now than they have been really in any time in the past 4 years, or maybe just slightly lower than they've been at any time in the past 4 years. Right now, there's 4,502 single-family homes on the market, and that represents about a 22% increase over what it was this time last year. Now, at the same time, our sales, our sold homes are up 2.6% over what we were last year, but our interesting number this month is the pending home sales index, which is up at 21.6% more than we were a year ago. So what does that mean? Well, it means that if you're a buyer looking in the market today, you can actually have a choice of homes. There should be several that you can look at in your price range. And it will depend a little bit on what specific area you're looking at, and of course, what price range you're in. It also means that you likely will be able to get an inspection. You're not going to have to do multiple offer competitions, and you're probably going to be able to get some favorable terms. As a seller, what this means is that there's a lot of other competition out there, and so what you need to do is you need to price your home right. You need to price the first time to sell and not do a try price, because if you do a try price right now, as we're going into the fall and then into the holiday season, that could really bite you, and then eventually you may end up selling the house for a lot less than you could have sold it had you priced it right to start with. So when we look at comparables and we're pricing homes, we're actually looking a lot more at what's going into contract and not what is sold 30 days ago or what sold this past spring. So that's kind of what's going on in inventory. So now as we look at interest rates, the next thing we're going to talk about is not a whole lot of excitement in the past month, but we're going to look at the overall trend of interest rates over the past, or really the year to date. When we look at where we were at the beginning of the year in this graph, you can see that they peaked out in January at 7.26% on around the 13th. Then over the course of the year, they've steadily come down and then actually bottomed out on September 16th at 6.13%. Now that's a pretty steep decline. It's over 1%, like 1.13%. And then of course today, interest rates are sitting at 6.38%. So what happened between the 16th and the 18th was kind of interesting. So the 16th was the day before the Federal Reserve made the announcement about cutting rates. The 18th was the day after the Federal Reserve made the announcement about the cutting of interest rates, and they dropped them 0.25%, and yet from the day before to the day after, they actually went up by 0.25%. Why did that happen? Well, in my opinion, I think what happened was that the Federal Reserve removed any doubt that they were going to do a larger cut, like a 0.5% cut. And so there was some of the market baking in the chance that that would happen, that there'd be more of a dramatic rate cut, and there wasn't. So when that happened, rates came back up. Now, 6.38 is actually a pretty good rate historically, and I do expect rates to continue to come down. We're expecting the Federal Reserve to make one or maybe two more cuts yet this calendar year. And more importantly, I think that by February, the Federal Reserve is going to stop their program of reducing their balance sheet. So what does that mean? Well, the Federal Reserve had bought a lot of mortgage-backed securities and increased their balance sheet above what they normally hold. And over the past 2 years, they've been selling those mortgage-backed securities on the open market. Now, when they're selling mortgage-backed securities, what that has the effect of doing is it actually increases the rate you have to pay to originate a new mortgage, because when you do that, you have to compete with the sales of these rates on the back end of the market. All very complicated, but what's going to happen, I think, is that the Federal Reserve will stop reducing their balance sheet in February, and when that happens, rates should actually come down. I don't think a lot of people have factored that into their calculations, but I personally am seeing that rates probably will be below 6% coming February of this year. So that's what's happening with interest rates. So let's turn our attention to how much our house is worth today versus what they were worth a year ago. This time of year, we do typically see house prices coming down from their peak. Now, and as an example of that, when we look at what prices were last month in September versus what they were in October, they've actually come down about 1.2%, which is kind of a negligible amount, or definitely within the margin of error of most. But when we look on it on a longer period of time, because not very many people buy a house last month and sell it this month, over the course of the last year, the house prices have gone from $335,000 in median sale price in 2024 to $345,000 sale price in 2025, and that represents about a 3% increase. Now that 3% increase is a little bit below what we have seen historically on average, how homes go up in value. However, we're still going up in value, whereas a lot of markets are actually going down in value. And so your decision to buy a house here in Central Ohio was a smart one. So that's all I have for you today. If you want answers to questions about your specific situation, please reach out and we'll set up a strategy session and talk about your unique position. My name is Ryan Reynolds with Keller Williams Consultants Realty and the Ryan Reynolds team. As always, guiding you to the home that fits your life.